Good morning. If your mortgage matures in the next 36 months, watch this. Over 1.5 trillion in real estate loans are coming due in the next few years. And that's not a headline. It's a structural shift in the lending market right now. If you're a homeowner or an investor or business owner with a mortgage maturing in the next 36 months, this is something you need to understand now and not later. So, what is the debt wall? Well, the debt wall refers to a massive wave of loans, whether it's residential, commercial, and investment. They were all originated during low interest rate environments. So, think 2020 to 2022, and now they're all approaching maturity. And most of these loans were structured at historically low interest rates, say 2.5 to 4%, with aggressive leverage and optimistic valuations. And now this environment has changed rather substantially as rates are significantly higher and lending standards are tighter than they once were, but also property values are more scrutinized. So, why does this matter to you as an owner? Well, if your mortgage is maturing soon, you're not just having to refinance, but you're also having to requalify in a completely different credit market. So, here's what that could mean. Could potentially mean higher interest rates and higher payments. And even a 1 to 2% rate increase can raise your monthly payments and debt service pretty significantly, which will impact your cash flow, especially for the investor angle. But it will reduce your borrowing capacity as well. So you're facing a little stricter underwriting than in the loose COVID years. And lenders today are more focused on debt to income, so DTI, but also debt service coverage ratio, and with a big focus on liquidity and reserves. So you may have qualified before, but that doesn't guarantee reapproval in today's terms. So lower loan proceeds. And in many cases, you may not be able to refinance your current mortgage at the loan balance that you originally got the loan at. So some folks need to bring cash into the closing to make the deal work again. Let's talk about how professional borrowers are handling this. Well, sophisticated borrowers are not waiting for maturity. They're getting ahead of the problem now. And here's how they're doing that. So early strategy reviews, 12 to 24 months, please call and talk to me. Let's kind of set you up for success. We'll talk about your current loan structure, what the market conditions look like, and what exit options are likely based off of the scenario we discuss. Two is we can explore multiple loan types, and not all loans are created equal. And there are conventional bank loans, the DSCR loans for investors, there's bank statement loans for self-employed borrowers. There's also bridge loans to reposition residential and commercial assets. And managing liquidity is an important concept right now. Cash is leverage in today's market, and more reserves equals a stronger mortgage approval. And better terms usually mean lower risk as well. So structuring and not just shopping interest rates. And this is where borrowers can get it wrong sometimes. And their main focus is always what's the lowest rate, but it's also the lowest rate from the bank that you're most likely to get the loan from too. Because a lot of folks with the lowest rates have additional requirements. And what structure gives me the highest probability of approval and long-term success is the real question. So the biggest mistake borrowers will make, and that's waiting. Many borrowers are just hoping that the rates are going to come down to 2 to 4% again. And I'd love to tell you that's true, but I don't think it is. And conditions will improve further, and timing will work itself out. But here's the reality. The closer you get to maturity, the fewer options you're going to have. And it's always best to strike when the iron's hot. So, final takeaway for the day. And over the next 36 months, we're going to separate some prepared borrowers from reactive borrowers. And strategic financing is more difficult from a forced decision. And if your mortgage is maturing soon, the move isn't to wait, it's time to plan. So my call to action to you today is if you're buying or refinancing or having a loan maturing in the next 36 months, let's structure your financing like a professional borrower. And you can visit me at my website, billraponline.com. Love to talk to you more. You can figure out how to get a hold of me and we can have a conversation. You take care.